Well, hello, investors and traders. My name is Roger Scott. Today is May 6th. It's a Wednesday. I still don't know where the year has gone, but as I always say, let's get into it right now. Starting with the overnight session, global stock markets were mostly higher Wednesday as hopes for economic recovery rose after government eased antivirus controls. I'm still curious how that's going to work out. There's still a lot of people that are sick, and there's going to be a lot of people infected. I don't know if that's a great idea or not this early in the game. Indexes in London, Shanghai, and Hong Kong rose, and Wall Street futures posed to rise on the open. Japanese markets were closed for holidays. Investors are increasingly optimistic as European countries and some U.S. states allow businesses to reopen despite warnings coronavirus infections still are rising in such areas as Brazil, and economic recovery could be ways off. It really is something that's perplexing. Many analysts are skeptical about the recent rally, including this one sitting right here. They say it's an overdone given uncertainty about how long the recession will last, but the S&P 500 has recovered more than half its losses in a sell-off earlier this year. And as I mentioned, my opinion is that is mostly a reaction to what happened and not a state of where we're at right now. China, where the pandemic began in December, has allowed factories and some other businesses to reopen. France, Spain, and other European governments are taking similar steps. U.S., including Texas and South Carolina, some southern states, have allowed restaurants and other businesses to reopen. California might allow retailers to resume serving customers this week. This is a big week. Still, the deputy chairman of the U.S. Reserve, Richard Clarida, said Tuesday the economy needs more support from central banks and possibly additional government spending before it can recover. And I believe that 100%. My view is very simple and this. We don't have a denominator. We don't have a vaccine. We don't know if there's one strain or two strains. We don't know if people can get reinfected. That's a lot of unknowns, folks. That is a lot of unknowns. And I think it's very hard to proceed in light of all of that and to be able to extrapolate any kind of data when a lot of that data is still unknown. Anyhow, that's my opinion and I'm sticking to it. The broad market, looking at the broad market, let's look at the S&P 500 and then we'll get into today is Wednesday. And you know what Wednesday is? We give you Red Meat Wednesday. That means we give you a stock. We give you a stop loss, we give you an entry, and we give you the option as well. S&P 500 still trading below the 200-day moving average, still trading below the averages, and is still bearish. I like the fact that volatility has been low and consistent, and I love the fact that the NASDAQ 100 is still trading above the 200-day moving average. And if we can just get rid of all of these lines here and actually see the index, we will see that it's still trading above the 20-day line. That's that little yellow line, and the trend line, which is very important because we have a good idea of what happens if it breaks below the 210 level, which means it's probably going to go down back to the 200-day moving average. But so far, it's holding well. But again, today's Wednesday, and we're going to go a little deeper today. So we start off looking at the top sectors because we want to trade a stock that's either we want to buy a stock in the strongest sector or we want to sell a stock in the weakest sector. So since the NASDAQ 100 is above the 200-day moving average and it's looking bullish, and the NASDAQ technology has given us 19.31% over the last 30 trading sessions, and the only time it's been negative has been a 3-month period, it's still outperforming by a pretty good shot. You got healthcare, but after healthcare, look at this, 881. So the two sectors that I would focus on would either be healthcare or technology, but since technology is leading, and since the QQQ, the NASDAQ 100, as you can see here, is maintaining strength, why don't we do a tech stock? So this is our list. So here we go. Let me back up. I started right here with our 10 sectors. We looked at the strongest sector. We looked at the weakest sector. We looked at tech. Tech is still leading. We looked at the NASDAQ 100. NASDAQ 100 is leading. So we decided we'll go with the tech. Then, instead of looking at our 10 sectors, we look at the top NASDAQ stocks in the order of strength. So Tesla's the strongest. Well, I don't know if that's a tech stock or not. And at this price, $768, even the owner of the company thinks it's overpriced. I love that. Then we got biotech. Biotech, hey, we got AMD. How do you like that? And it's only $52, and it already reported earnings. Let's take a look at AMD. I like what I'm seeing. We never had a cross between the 50-day and the 200-day line. Notice, no cross. If you look at the QQQ, even the QQQ crossed right here, but AMD never crossed. It's staying above the 50-day moving average, definitely above the 200-day moving average. The stock is looking bullish, and all-time highs are at 59, and the stock is trading at 52. I like what I'm seeing. I like what I'm seeing quite a bit. So we like Advanced Micro Devices. Ticker symbol is AMD. The stock's trading at roughly 52.5. Let's look at the options. So we don't want options that expire in 3 days. Usually I'd like to go out about, let's see, how far is this? 31 days? Nah, not enough. How about we go 73 days? 73 days, it's a monthly option. Perfect open interest. We got plenty of volume. And this way, if nothing happens within a few weeks, we can liquidate it. So looking at this, the stock is trading at roughly 52.5. How about we look at the 55 strike price? 55 strike price call option that's expiring in 73 days. 55 call. It's trading right around $4, $3.90, $4. As you can see here, the bid is $3.90. The offer is $4. The midpoint is $3.95. That was the closing price. It's supposed to open about a quarter or so, maybe a little less higher. So again, the price I would pay for the 55 call that's expiring in 73 days on 7/17 is about $4, give or take, in that ballpark. And here's the thing. If the stock doesn't do anything for a month, and assuming implied volatility is the same, the option only lost about $1.20. Look at that. 70 days, 72 days versus 45 days. $4 versus $2.80. Not bad, right? So you hold the position. If it goes down, we liquidate it. If it stays our way, we buy it. Now, the way I trade options is I use the stock as a proxy. So we already know which option we want. We want the 7/17 monthly option expiration. It expires in 73 days. We're not going to hold it till expiration. We're looking at the 55 strike price call option on the strongest tech stock in the strongest sector. Makes sense, right? So let's look at the chart and let's see where we'd enter the position. What I would do is I would enter the trade if the stock trades above 53.70. 53.70 on a buy stop would be my entry. And I would liquidate the stock if it dropped to the 50-day moving average. If it touched the 50-day moving average, which is at 48.27. So let's say 48.25. So I would put a buy stop at 53.75. And I would put a liquidation sell at 48.25. Now, if I'm trading the option, I would still buy the 55 call that expires 7/17, but I would wait to buy it when the stock trades above 53.75. I would put an alert on the stock, and then I would just initiate the option once it triggers the alert. And then let's say the stop loss gets triggered, well, I would liquidate the option in that case. So we are trading the option, but we're using the stock as a guide or as a proxy to trade the option. Again, AMD, 7/17 expiration, 55 strike price call option, currently selling for around $4. We would buy it at 53.75 on a stop when it goes slightly above this area right here, and we would liquidate it at 48.25. And again, we would use the stock as a proxy, and no, we wouldn't hold it till expiration. I would probably give the stock a few weeks. If it doesn't go our way and start reaching for the highs, I would liquidate it. Now, I've got just the thing for today's market, folks. I really got you guys covered. I developed a system that works during and after huge market crashes, protecting you on the way down and making you money on the way up, and delivering stocks primed to explode higher during the rebound phase. Actually, not stocks, ETFs, gold and currency ETFs. You could trade them with a stockbroker. They're very optionable. You can make money, and it's not correlated to the stock market but you trade it like a stock. I love this. This is my go-to strategy when when the stock market is not cooperating. So here's my number one pick, just crossed the 200-day moving average, and it looks to pose for a massive breakout. And I'm loving it right now. Again, it's a system developed and works after huge market crashes, after huge market moves. This will help you during the current market environment. This is not correlated with the stock market, but you trade it like any other stock. I love it. I love this system. This is one of my recession-proof strategies. I coined that from Josh Martinez, my friend, but I love that word, that phrase, recession-proof strategy. Anyway, it's my number one pick. It just crossed the 200-day moving average. It's posed for a massive breakout. You don't want to miss out. Click the button below or the button at the end of this video. Check this out. You don't want to miss this. I'll talk to you guys soon. Have a great day.